Hello and welcome back. I always like to follow the current trends and I'm looking at what's happening in the stock market in an attempt to bring to you the most important news and potentially even bring some education that could prove useful for your investing. And one of the things and one of the companies that I was looking at lately, because there is a lot of talk about it in platforms like Reddit, is CEI, or as it's called, it's Camber Energy is the full name of the company. And as you see here, this article is talking about this, and it tells us that there has been some heavy trading for this stock, and it seems to be soaring higher. And it's an oil company, and as you can understand, it can grow massively in the current environment. And as you see the article, the first thing that the article mentions here is the Reddit talk, nothing about financials or anything of that sort, is about a pump and dump scheme here. And it's basically referring to people talking about it, and I don't know, maybe diamond hands and things of that sort. But it's worth noting that CEI was actually up 44.9% as the article was written yesterday, but actually closed at 64% higher and seems to be trading upwards 7% more after market today. And so if you are an investor and you are enjoying reading all sorts of news and you have potentially bumped into this one, especially if you are a non-seasoned investor, you may be thinking, okay, this seems to be pumping higher, it's an oil company, oil seems to be doing great, why not get some? And this is where I wanted to make this video. This is why I wanted to make this video, just to give you an idea of what's been going on here and what you should be thinking about when you are potentially thinking of adding such a company to your portfolio here. Now, the first thing that I wanted to talk about is this quick pump and dump schemes. I mean, you can see here that this company actually was sitting at half a dollar back in the 23rd of February, really. So it's about 10 days, 15 days now that this whole move has been happening. And the massive growth actually happened in like a couple of days or so, if not even that, really. And so you will see here that the 1 month growth of the company is sitting at 140%. But does it actually make sense in terms of the financials of the company? This is what we want to examine here. And I want to quickly take a look at the income statement and see that the company is featuring massive losses here. And look at this gross profit is growing worse and worse year over year. And you will see here that the net income of the company is in the negative, although at least not too red over here. And the balance sheet of the company, the total assets very close to zero here, a few liabilities, the total liabilities of like $2 million. This is like a very, very small shop next to you, like it could actually be next to your home or something. Very, very small. And before the massive increase, the market cap must have been around like 30, maybe 40, 50 million, something of that sort. And even that could have been overpriced actually. A total equity of 10 million though over here, and at least it's not negative. But the cash flow of the company, and as you would expect, there's not much happening in cash from operations or cash from investing and financing. But at the bottom line, the thing that you see here, we're having negative cash flow, though at least it's not actually growing worse and worse. So it's at least sitting at a similar spot, about close to zero at least. So it's losing 2 million over here. And so the thing that I want to examine here is there any situation, any potential reason why I would own a company of that sort? And in order to give a quick answer to that and kind of help you understand why you should or shouldn't actually own a company of that sort, I'm going to use a discounted cash flow model just to show you how you can use the company's financials and how much money they are making to project how much you should be paying today based on what the company is going to be doing in the next few years potentially. So let's take a look at the discounted cash flow model next. And so I have the model over here, and obviously oil is a very, very cyclical market, and you can see all sorts of growths in the negative and then very, very positive and then very, very negative and again negative, and then negative here and positive here and positive again. So it actually, is sort of like a chessboard here. It's going from black to white. And this is very, very typical for oil. And adding to that the fact that this is a penny stock, you can see that, the revenues of the company, the net income and free cash flow are really, really different depending on the year and what's happening in the markets. Now, you can see very, very quickly here, and this is a very nice glance at the financials, the averages here, that the revenue growth of the company in the 5-year average actually has been at about 50%. And the last 3 years it has been much worse because of the environment. For oil, it wasn't the best. A lot of oil companies actually went bust. And last year it was terrible, minus 90%. A lot of companies actually went bankrupt, and that's one of the reasons. And I will be super optimistic here and use like the best 50%. And I'm gonna go like 30, 40, and 50 here. And the net income margin, look at that, everything is negative here for the averages of the company. And as you can see, the averages are for the most part negative apart from 1 year. So what can you use here? It's almost impossible to deduce what kind of value the company will be making and what kind of net income margin you should be using here. So I'm gonna go with something like 10, 20, and 30, which is extremely optimistic based on what the company has been doing. But if I go negative, we're not gonna be getting anything back from the model here. And you will see here the free cash flow margin is at 20%, 27 and 93. And so I'm gonna use 20, 30 and 40 here. And an annual return of 13% is what I typically like to use, more than 10%, which is what the average S&P 500 fund would return for our investment. So if you calculate, I have used it to calculate it earlier actually, you will see that we're getting a value of like 1 penny or 2 pennies here for high estimates, while the current price is at more than $1 because of that massive pump that has already happened. So you can see we're talking about a pump and dump scheme here, and just by looking at these metrics here, you can quickly know why you should be avoiding this company immediately. The moment you see this over here, even if you see this table here or this table, you should immediately know that this company is something to avoid immediately and just not even think about potentially holding it. Now, if you want to trade an instrument of that sort, you need to be cautious because this has a low float, I believe. It's, let me examine that. It has outstanding shares of 300 million. That's actually it's not actually that low, but you should expect it to make to have some sharp moves really. And it's a potentially interesting trading instrument that you can use for your trading, the ticker, and examine how it's moving in terms of some indicators and all that. If you are into trading, you can definitely do that, but in terms of long-term investing, extremely dangerous, and I would definitely not recommend. And this is why I wanted to make this video, because you may have heard of this company, you may have heard of the hype, and I wanted to urge you to be extra cautious, because you can hear about all these companies that are pretty much some pump and dump schemes that will eventually get dumped when oil gets back to normal. And again, it's a very cyclical market, it will happen. And because of the fact that there is a boom right now in the oil industry, you could trade this one and maybe take it, I don't know, to $3 or $4 if that happens at some point. But you really wouldn't want to hold this company for a long period of time. That would be very, very dangerous. Hopefully that video helps you a little bit, gives you some ideas about companies of that sort. And if you did like it, please leave a like, because that really helps the channel grow. And if you enjoy this kind of content, you may want to subscribe as well. We're making tons of content for you pretty much daily. And if you enjoyed this one, take a look at this video that I made earlier, and it's about 10 interesting tech stocks that have been really beaten down lately, and they are potentially worth your interest. And I'm taking a closer look and examining each one by one really, and taking a look at the financials and how much they're worth today. So I think it's an interesting video to watch for you. So thanks for watching this one, and I'll see you in the next video. Bye bye.